Okay, finally we're taking a look at the CompQ, the Nasdaq Composite. Must remind everybody this is for educational purposes only, and please do your own due diligence. Well, very similar story to the other indexes. We had this 3 candlestick pattern the last 3 days of the week. Today was an extremely bearish day for the most part, and I am expecting this to continue to retrace with some follow through next week. It'll be interesting to see once again what happens with Goldman and Citi, among others, going forward into earnings season. So where is it going to go? This shelf right here, 2400, would be my first pick, and then it would come down to this swing high, which resides about 2330. Then we have this swing low at 2200. We're down here at about 2125, 2120, in that neighborhood. This channel back here, which was put in November and December, should act as some support if it goes that far as well. And then we have the swing low at 2025 back here in November. We also, as with the other indexes, have some trading action back here. Actually, from 2007, there was a swing high in February of 2007, and a swing low from August that provides some confluence at this particular level. There's also, as I mentioned before, some Fibonacci levels that would indicate that this would be resistance as well. So the key is going to be next week, I think, to see what happens with earnings and follow through, and see if we get some follow through. And again, this would be the first level that I would look for, is about 2400. If it breaks down out of here, you're going to retest this area here at about 2330. So stochastic's not showing much of anything other than a crossover. It hasn't crossed back below the 80, and the MACD is pretty flat right now too. So it's kind of a wait and see to see what occurs here next week, and actually in the coming weeks. I don't think from a fundamental perspective that this is just a one-off event. There could be more issues out there that are undiscovered or unknown right now that will surface and could make this a bit more than just a 1 or 2 day event. Must remind everybody once again, it's just so prudent to trade being hedged. You need to be nimble. This is kind of a, whether you want to believe it or not, the complacency that's been exhibited in the VIX, and I don't think it's probably a wise or prudent thing to be complacent any time that you're trading the stock market, especially if you're looking at a bearish move, which could occur, and it could occur very severely. As they say, the old saying is that the market goes down like an elevator and up like an escalator. So when it decides it wants to turn, it can turn viciously down, and you can be put in jeopardy. So stay nimble. All right, with that, look forward to talking with you guys next week, and trade smart.